Listen up, heroes of the double shift and the Costco hot dog diet. While you all were scraping quarters off of the floorboard to pay for your gas, Michael Saylor walked into Wall Street like a drunken pirate at closing time and yelled, "I will take all of the Bitcoin." We know that miners spit out 450 Bitcoin per day, and then Saylor slurps up 630 BTC every day for 2025, a staggering 140% of the daily Bitcoin issuance. That's like Krispy Kreme making a dozen donuts every hour and the same lunatic keeps buying 15. You smell that? That is tomorrow's supply of Bitcoin gone before sunrise. Now the blue check Twitter MBA crowd, they continue to scream MSTR is overvalued, this is tulips. But the reality is those geniuses, these critics, they can't add two integers without a VBA macro, yet they feel qualified to lecture us about scarcity. But because we are orange-pilled and we understand Bitcoin, that means that we have a clearer view of reality. So this is the big headline from 2025. There's obviously the big Bitcoin treasury boom, but strategy is shrinking the available Bitcoin faster than you can collect your next paycheck. Every single coin that Michael Saylor locks away forever means fewer coins for your 401k, your kid's college fund, or that emergency fund that you never actually build because your rising rent ate it first. You see, when the supply of Bitcoin gets more scarce over time, that means prices go nuclear. We have observed that throughout all of Bitcoin's history, but you just need to understand how fundamentally different 2025 was for the long-term holders versus the entities that were accumulating Bitcoin. We saw a massive changing of the hands in the asset class from individuals to corporations with zero incentive to ever sell. So grab the orange pill today, chase it with a dollar store energy drink. The Bears had 2 years to do the math. They choose vibes, but you are here for the facts. And fact one, Saylor is draining the pool. And fact two, you cannot swim in a dry pool. So pick a side before the lifeguard blows the whistle and shuts the gate. So let's run the tape. January 1st, Strategy had 447,000 Bitcoin. And by Christmas, they were jingling bells with 672,000 in 1 year. That is a 225K increase in their Bitcoin hoard. That is a 225,000 increase in the Bitcoin hoard in less time than it takes the DMV to print your license. And if you do the division in 357 days, that's 225,000 coins. That means roughly 630 Bitcoin per day acquired. And the miners cough up only 450. Saylor is buying the new supply and mugging an extra 180 from the weak hands that are out there every single day. This is a buffet where a chef is laying out 450 chicken wings and the same Wall Street velociraptor is shoveling 630 onto his plate. Everyone else wakes up, they see the bones that are left over, and then the waiter says, "Sorry, the gentleman at table MSTR pre-ordered your entire dinner." And that is exactly how the spot market is feeling with Strategy accumulating all of this Bitcoin with this persistent bid. And the math gets nastier. At current dividends, Strategy can coast for 73 years. 73 years, that is 2 full careers, 3 different economic recessions, and at least 1 national apology from the Federal Reserve. They never need to hit the sell button on top of that. They have a USD reserve as well. And then you have this anti-math crowd that's just complaining about Saylor and MSTR on Twitter. They're screaming, but their valuation model couldn't predict what MSTR did over the last 5 years, so now they're just mad that they didn't take part. The reality is that the modelers out there do a lot better job explaining after the fact, and none of them predict the future. They're loading glossy PowerPoints into a flamethrower while Michael Saylor is loading Bitcoin into his balance sheet. So the only equation that counts is the available supply equals new coins minus Strategy's appetite. And right now, that equals negative. That is correct, negative. When the supply goes negative, that means the prices have to go radioactive over time. And fun fact for you, the guy who owns the isotope writes the rules. So welcome to the fallout. Strap in or stay broke. All right, folks, here is the heist plan in plain English. English for you. Saylor walks up to Wall Street, he flips the open sign, and then he sells new shares at market every single time that TikTok FOMO spikes the price a little bit. That little ATM program is a money hose straight into his pocket. The crowd buys the stock at a premium, he hands them paper, and then he uses their cash to grab more Bitcoin. The shareholders have their Bitcoin exposure increased, and Saylor gets Bitcoin. It's a win-win. He is literally financing the Bitcoin haters' future poverty with your own enthusiasm. What a beautiful thing. And then the next move was obviously convertible notes. He has outstanding convertible debt. What does that mean? Well, Wall Street, they love free yields like your uncle loves scratch-off lottery tickets. So they hand Strategy a few billion at a 1% or 0% coupon, and those bonds are monopoly money until conversion, which means that he effectively prints dollars that the Fed hasn't even debased yet, and then he swaps them for hard cap sats. And then he issues preferred equity as well. He'll take your money, pay you an 11% fixed income, and then he'll just take that money and buy Bitcoin that appreciates faster than 11%. It's almost like the greatest business model ever created. So each round of buying pushes up the BTC yield, which is the BTC per share, and then the higher share price over time when Bitcoin starts to move, that means bigger ATM raises next time, and then bigger raises means bigger Bitcoin buys, and then bigger buys mean a tighter supply of Bitcoin, and then the tighter supply pumps the share price again. And that, my friends, is what we call a positive feedback loop. Michael Saylor and Strategy, they are drinking the dollar milkshake, and this is what they're doing with the synthetic halving. It's just math. You could teach it to a grade school science class if grade school was allowed to discuss anything useful, of course. And you have all these bears on Twitter and CNBC. These people, they're waving charts that look like abstract art. These are the short time horizon chart squiggling lunatics out there. These are the people that say liquidity is going to dry up as if the last 20 deals did not clear in 10 minutes. They say that MSTR can't keep this pace forever. They say that if it trades below the value of their net assets, it's just a done deal and it's going to be a bankrupt company. And then they ignore the fact that the company actually traded at a 30% discount to the net assets back in 2022, and then we've seen this incredible level of growth since 2022. The bottom line is that every single time Saylor pulls the trigger, he's gonna vacuum the coins out of circulation, the float is gonna get lighter, your stack gets more expensive, and the guy in a polo shirt on Reddit who shorted at $450 has to sell a kidney. What Saylor has created is simple, it's brutal, and unstoppable. So remember the 3-step playbook here: mint equity, flip debt, buy Bitcoin, rinse, repeat, and bankrupt the skeptics of Bitcoin. And if you're not at this table, that means that you are on the menu to be eaten. And one brief point about the preferred equity, they just raised the dividend on STRC to 11%. That's correct, 11% paid fixed income on an annualized basis, paid monthly, mind you, and they're going to be issuing that in an environment where the Fed is going to be cutting rates in 2026. Can you imagine the persistent bid on Bitcoin with the Fed cutting the rates and the fixed income crowd has to turn to Bitcoin-backed yield to compete? It's going to be an amazing thing, and this is why Strategy will continue to force the bid on Bitcoin. All right, let's talk about your future loan application, okay? Picture yourself walking into your bank with your sweaty W-2s, you're begging for a mortgage, and then the loan officer leans over the desk and whispers, "Yeah, sure, we'll lend to you, but collateral in Bitcoin only." And then he flips his little computer screen that says 30-year fixed mortgage, 11% payable in sats. That's when you gasp. He just shrugs, and then he points at the chart that says MSTR hoard equals 672,000 Bitcoin. You see, this is what's going to happen. When one company continues to gorge on hard money, the rest of the market gets the broccoli that nobody wanted. Liquidity turns into a gated community with Saylor at the guard tower with a rifle. You want to borrow Bitcoin? Get in line behind sovereign wealth funds. If you want to lend against your Bitcoin, you need to pony up a rate that makes the payday lender blush. And this is going to be the new reference curve. The prime rate for Satoshi Capital is whatever clears the auction at Strategy's door. Stores of value aren't supposed to have a toll booth operator, but here we are. Every extra coin that Strategy swallows will tighten the vice. And can you imagine after the 2028 halving? Your university endowment, your city pension, and even the hedge fund clown with some house in the Hamptons, they're all going to be competing for crumbs, and crumbs appreciate very quickly. And to all the Twitter bears who've been screaming valuation bubble for the last 5+ years, they are going to be begging for sub 10% loan terms like kids swapping Lunchables, because their spreadsheets never modeled a world where the float is negative. You can't price risk when the denominator just vanished. They just tweet cope while Strategy files another S3. So get ready, because Bitcoin isn't merely scarce, it is on a leash held by a publicly traded vacuum cleaner. The working class is either going to own a slice of the vacuum or pay rent forever in a coin that they can't touch. And that's why you gotta race to buy Bitcoin now, because it is being accumulated. This is the point of the horror movie where the doors lock and you realize that the exit sign is painted on the wall right in front of you right now. All right, kids, let us now sort the seating chart on the Titanic before it hits the iceberg again. First row, we got the champagne service, leather seats, the people who bought MSTR 5 years ago, and they actually outperformed Bitcoin in dollar terms. They literally protected their purchasing power faster than Bitcoin holders. People who bought MSTR back when the bears called it a clown stock, they watched their equity lever Bitcoin at turbo speed, and the dividend check sweeps in like rent money from the perpetual preferreds, like it's a tenant who actually pays on time. And then the second row, we got the craft beer and the pretzel bites. We have the early Bitcoin stackers who never flinched. They actually owned the Apex asset before it became a hostage, and now they are charging a finder's fee every single time someone asks if you have any spare sats. And then back in coach, you're going to have the crying babies and the stale peanuts. Think of the mutual fund boomers and the endowment suits who thought that reallocating next quarter would be fine. They crawl up to their open Bloomberg terminal, they see a bid-ask spread that would look like a ransom letter, and then they realize that the boat sailed while they were arguing over ESG scoring. And then back in the cargo hold with no windows, you have the fiat savers, the side hustle Uber driver people. They kept dollars because Dave Ramsey said that envelopes of cash were safe. Surprise, their baby step envelope now buys a half cart of groceries and 0 Bitcoin because Saylor vacuumed the float. And the bears, the absolute heroes who shorted MSTR at 200 because valuation, pictured them in the stocks on the town square while the community tosses rotten Bitcoin memes. They will continue to gamble against arithmetic and Bitcoin's inevitability. They will lose, and they will stream affiliate courses on how to stay solvent. Remember, there is no middle class in a synthetic halving. The demand is too much. People have not realized that we've never encountered true scarcity before. There are landlords with Bitcoin collateral, and there are tenants paying in ever-shrinking dollars. Choose your seat before the doors totally seal forever. The flight crew does not accept excuses once we reach cruising scarcity. Now, here is the infomercial part of my sermon today. I'm not giving you any metaphysical stuff, just survival instructions. However, remember, this is not financial advice. This is financial entertainment. But knowing this information that Saylor is buying more Bitcoin than the miners can supply, what do? Well, you can own the vacuum. You can buy raw Bitcoin today before the buy button looks like an archaeological dig. Skip your fancy Starbucks frappe, okay? Just move the decimal, let's go. And then you could obviously grab MSTR if you want the leverage rocket. Yes, it wiggles like a chihuahua on Red Bull, but that volatility is the price of a front row seat to the orange singularity. And in this environment where inflation continues to be way worse than is reported, the dollar continues to lose purchasing power, you are trapped. So what can you do from a very practical lens? Well, you can stack skills with AI, you can do side hustles, honeybees, whatever pays you in sats. Remember, dollars leak faster than a gas station roof after a hailstorm, and it is your job to accumulate Bitcoin before the structure is shifted. You gotta stop begging the banks for permission anymore. You need to self-custody cold storage Seed phrase tattooed on the part of your brain that remembers your first heartbreak. Because this is the final headline, kids. The synthetic halving is not waiting for 4-year block intervals anymore. It happens every time Saylor refreshes his Coinbase screen. Either you front run the Hoover or you pay tribute to the Hoover operator. History rings the bell once and then the door slams. Choose before the echo fades forever. My name is Adam Livingston. I am the Bitcoin Wizard. Thank you so much for tuning in to yet another Swan Bitcoin transmission. Please like this video and subscribe to the channel as we are leading the commentary during the greatest wealth transfer known to the history of humanity. Have a terrific weekend. Do not party too hard. Class dismissed.